Oh boy. Who's got banking crisis fever? Hey everybody, Real Estate Ninja here. I hope you're doing great. Ooh, wait, the lighting is just off. We just can't have that. Just move over here with me. All right, we are in a banking crisis. I know it's just New York Community Bank, but it's sort of a big deal. Why? Okay, very easy to explain this. Wow, this lighting it's bright, it's shadowy. Okay, New York Community Bank bought some assets from Silicon Valley Bank. That was too much. They were touting how exciting it was. We bought a bunch of assets for pennies on the dollar as banks were crashing in 2023. Now they're crashing. And as their stock price keeps dropping and there are regulators getting involved, and even the FDIC came out again and said, you know, only 85% of these depositors are insurable. They're telling you right there, if you have your money in a bank and it is not insured by FDIC, there's a point where the FDIC is not going to bail you out. All right, they bailed everyone out in 2023, except for the shareholders. They lost everything. They don't talk about that on the news. They lost everything. But there are bank accounts out there that are not insured, and FDIC has come out and said, we're insolvent. So we're just letting you know what's going on. Big banks are screaming and crying, going to Congress. Right now, we are in one of the most epic banking crises in the last 100 years, and you're not seeing it on the mainstream. Now, this story, I'm going to talk about some of the mainstream. It's on Business Insider. But the thing is, and truth be told, I pay subscriptions to all these to get these news stories to you. So it's not like it's free and accessible to everybody, right? So you're going to see it more and more on CNBC and the mainstream after it's too late. All right, now here we go. Now, first, again, I want to remind you, this is because of a real estate crisis. It's in commercial real estate, but remember, commercial real estate is anything from 5 units, residential and above. And then you've got your Costco's, your Burger Kings and all that kind of stuff. But you are seeing right now one of the greatest banking crises since the Great Depression, M2 money supply collapse, biggest since the Great Depression. And this is it. This is what the next Great Depression looks like, and nobody gets it. While Google is about to lay off 30,000 employees. Who cares? Who cares that FedEx and UPS are laying people off? Who cares that Amazon laid people off before Christmas? This is what it felt like for me in 2007, but this time it's on cocaine. Like this is, that was like everybody was smoking weed back in 2005, 2006 while I was selling all my homes here in California, and nobody believed me. This time, this crash is on cocaine, and if you ask certain people, that's a big deal. Okay, here we go. So we're going to talk about commercial real estate and how it's involved in the NYCB stock crash, okay? Also, real quick, there's a link down below to the real estate crash masterclass. I think it's halfway filled up for the month. And just so you know, something else I totally forgot to tell everyone, all of my future real estate courses are included in that. So it's 50% off if you want it, $24.99. And the first group coaching session starts at the end of this month, and I'll be putting out emails to everybody, so have your emails turned on. All right, here we go. NYCB's stock crash shows the peril of a bank growing too fast. It says American capitalism incentivizes growth, and investors reward companies for it, but it can be a completely different story in the banking sector. The New York Community Bancorp is the latest example. The Long Island-based bank shocked investors last week when it slashed its dividend by 70% to help conserve much-needed capital. Since then, the New York Community Bancorp stock crashed 64% and reignited fears of another regional banking crisis. Now, if you've been following the channel, you guys know that I've been saying, I called the last one, about 3 months prior. And I said that it's going to start again in 2024, and it's going to be much bigger this year than it was last year. Give some perspective. Last year, on a dollar scale, the banking crisis was bigger than all of 2008 combined. How does it feel? Well, what's crazy is it doesn't feel like a lot because commerce is still happening. Your friends and family are okay. At the same time, credit card usage is at an all-time high. Car loans, home loans, and all that stuff. And now the failures are starting, okay? The reason why you're not seeing everything come crashing down right now is because the government is trying to buy your vote, your confidence, and they're going out and spending a ton of money, sprinkling it on the poorest people, very little bit of money. And then what's happening is lending is still happening, but lending is starting to grind to a halt. Banks are slowing their lending, and it's going to get worse this year, and that's when you're going to see everything come apart towards the end of this year. We've already seen the wheels come off in the economy as of this last September and October, but it's not translating to what you would think is a crash because it's not in the mainstream media. It's in behind, all the data shows we're crashing, but they're not putting out in the mainstream media. So most people think a crash happens when they're told by their TV anchor that everything's going down, okay? But look at this bank stock as it's crashing over 60%. Now, a tipping point, it says, for the turmoil came last year when New York Community Bancorp decided to buy assets from the defunct Signature Bank, which failed shortly after the implosion of Silicon Valley Bank. See, that's another misnomer. Check this out. Banks all around the country are in long-dated, held to maturity bonds that they are losing their butts in. Why? Because they bought those bonds at much lower rates. Now that rates are higher, those face value, they can't sell those bonds for anywhere near what they paid for them. So those are down, but that's on their balance sheet, okay? So they're like, well, we haven't taken a loss yet, so it's not a loss. The problem is they now have a harder time borrowing money at a good rate because their balance sheet is not as strong. On top of that, they also, every single bank, every single pension fund has invested in commercial real estate around the country. Now check this out. This is what's scary. I've said this before. One of the nation's largest pension funds, the California State Teachers Pension Fund, just had to take a $20 billion loan, and in their own words, in order to avoid a fire sale of their commercial mortgage securities, their commercial properties, they are taking a loan of $20 billion just to keep up with the losses in that. Okay, so pension funds are screwed, banks are screwed, and my goal for you is you become stupid rich because you're going to position yourself properly for this real estate crash, because everything's going to crash as the Federal Reserve lowers rates. And what's crazy to me, this is unlike anything in 2007 when people knew that things were bad by 2007 and they were in panic, and the Fed hadn't started lowering rates yet. By the time they started lowering rates, it doesn't matter because nobody has good credit score or they're too scared to put their money in. So it just exacerbates the problem. Now everyone's screaming and yelling, please lower rates, and they're thinking they're going to lower rates prior to things getting bad. That's not true. And even the Fed came out and said it multiple times. We're going to be higher for longer. Please do not react like we're going to lower rates anytime soon. That's because they can't. There's one thing that this crash has that no other crashes all throughout history until since the roaring 20s had in common, and that is national inflation and worldwide inflation. It's a big deal. We've got problems. Now, going into back to New York Bank, it says that acquisition when they bought those Silicon Valley Bank assets, again for pennies on the dollar, right? Tipped New York Community Bancorp's assets past the $100 billion mark, and it's a big deal. And with it came a much more stringent set of regulations. The irony is that if it wasn't for the regional banking crisis, New York Community Bancorp may never have triggered the $100 billion asset threshold at all, said economist Mark Rubenstein last week. At the end of 2022, it had $90 billion of total assets, but its acquisition of Signature Bank out of receivership tipped it over the edge. And while a large and foreign banking organization regulator in the past has given banks flexibility in meeting its requirement capital ratios, once crossing that $100 billion asset threshold, that leash got a lot tighter following the Silicon Valley Bank failure. The normal supervisory practices did not keep up with SVBGF's rapid expansion. Regulators later said in their review of Silicon Valley Bank's downfall, the delay in a rating downgrade meant that Silicon Valley Bank effectively continued to operate below supervisory expectations for more than a year despite its growing size and complexity. Well, what does that mean for the rest of the banks? Well, any bank that's under 100 billion in assets has a much looser leash, and there are crazy things going on. I want to remind you of the banking crisis in 2007, 2008. These were banks that were failing, again, because of looser regulatory actions. Again, I want to remind you that the FDIC went to the big banks and says, you need to cough up, or sorry, the Fed actually did it because the FDIC went to the Fed and said, hey, we need more insurance money. And the Fed said, well, the regional banks are so broken right now that they can't pay the higher insurance rates for depositors. So we need to go to the big banks. So then you see the big banks, Bank of America, Chase, Wells Fargo, Citigroup, go before Congress 2 months ago and say, we can't, if you make us pay this, we can't compete with the national banks or the worldwide banks. Now you think about this. No one on TV is telling you this. No one. I got to go dig around for this information. We are in one of the greatest banking crises in the world. Now, that's scary crap, right? No, it's not. When you know a train's coming and you're standing on the railroad tracks, you get off the freaking tracks. So this isn't the time to go speculate in a bunch of debt markets, in crazy markets at all. This is the time to pay down debt and position yourself like, think about it. A mountain lion doesn't sit out in the middle of the street and go, hey, anybody want to get eaten today? I'm hungry. No, a mountain lion sits back, crouches down, gets low to the weeds so that he's not seen by his prey. And when the prey walks up to him, he attacks. That's how you have to be with finance. But the fact of the matter is, our nation isn't taught about finance. Our nation hasn't been taught about money and investing and how to become successful. Only very few elites get it. And well, now, thank heavens to things like YouTube, I can teach you how to do it. I was positioned properly, but I made mistakes. I wasn't positioned well enough. I was praying for a better opportunity. And for the last 12 years, I've been preparing for this time right now. And I'm going to go crush it. And I hope you do too. Look, you don't have to buy some fancy course with group coaching sessions or any of that stuff to be a success. I didn't need that to become a millionaire when I was 26. I just had books and I tried to find mentors. But now it's all about life hacks and using, people's failures and successes from the past to zip ahead in time. So if you want that, I'll put the link down below to the master course. But the point being is that you need to do something now. The banking sector is going through its second crash. You're in an election cycle, and you're in the greatest election cycle, I believe, in the last 100 years, because we have 43 nations going through a presidential campaign this election cycle this year. That means the whole world's going to go into absolute chaos. So if you're not ready for it, I don't know what to tell you. Thank you to everybody that hits the subscribe button and the thumbs up. Really helps me out. I'm super stoked on this channel. Thank you for making it grow so fast. And thank you to everybody that moved over to that channel over there called This'll Make You Rich, because that thing's blowing up. All right, with that being said, thank you so much. The Real Estate Ninja is out.